Time for our first guest now though, and Danielle Akuye has been involved in share investing in Australia and internationally for over 3 decades, both professionally and personally. Her experience and knowledge has been combined in her book Shareplicity, a simple approach to share investing, and recently she has also written an article titled How to Cope with Share Market Turbulence. She joins us now. Hi Danny.
Hi Lana.
Well, it's been an interesting time for the markets, to say the least. We're seeing an incredible amount of volatility over the last few months. Tell us a little bit about exactly what we're seeing though.
Well, you basically had a black swan event, which was the global pandemic that came out of China. And for quite a while, I think most of us didn't appreciate the extent of what was going on. But ultimately, we saw it spread beyond the Chinese borders, and we saw probably one of the most severe stock market crashes since 1987. And the Australian market, or the ASX 200, fell about 37%. And for most people, this was a pretty big shock. Of course, looking forward, we've seen the market recover substantially, and it's back at its all-time recent highs, up about 22%. But it's been a bit of a roller coaster ride for investors, both professional and also private investors.
Yeah, absolutely. I mean, you mentioned, that events such as coronavirus are referred to as a black swan, in that there's no way of predicting such a catastrophe. But are there any ways to best manage the risk?
Well, I tend to manage my risk through my cash positions, and that's because I have never been one to engage in buying options or puts on the market to protect the downside risk to a portfolio. So I think for most people, the best way is to say, how much cash have you got on the sideline to put into the market when you actually have these pullbacks? And that's typically how I look to manage my portfolio risk. When I'm very bullish on the market, I have less cash, and I try and take the top off those stocks that perform really strongly, take some profits and put it into some cash, and basically wait for the sell-offs, because even in strong markets, you actually get this rotational behaviour where certain stocks get pushed to great high levels, then they get sold off a bit, and the money rotates around the market.
Well, that's exactly, I think the confusion at the moment. We're hearing about the recovery, but we're hearing perhaps a U-shaped recovery, a V-shaped recovery, potentially a W-shaped recovery. I mean, what are your thoughts? Is it still a little bit too early to be calling how this is going to play out?
It's very tricky for anyone to know. I think what I have realised in this particular event is I've underestimated the animal spirits of humanity to actually try and solve these problems. And I think you've seen that in the way that we've all adjusted to new technologies. We're doing the Zoom meetings, we're working from home. And I think this event, more so than any others that I've lived through, we've really seen humanity taking on the challenge. On that basis, I think there's certain stocks and certain areas you can be quite bullish on. But like anything, we don't know how this is going to play out from a health perspective. We're talking about possibly a second phase of the pandemic in some countries. You could possibly argue that in America, they may just have one long phase that we all have to come to live with this problem. So how I'm approaching it is I have money back in the market, I still have cash on the sidelines, and it really becomes down to what stocks that you pick that are going to outperform over the longer term. And I have divided those into 2 different baskets. And one is basket A, which are the more defensive, less cyclical stocks. And then the basket B stocks, which are the more cyclical stocks that you would include the likes of the oil companies, the iron ore companies, the banks, those ones which are really responding very well to the possibility of the vaccine for coronavirus.
Yeah, okay, good advice there. I mean, what about for people though that might just only be looking to start investing? I mean, is this actually a good time to get into the market?
I think if you take a long-term perspective, and I know it sounds quite sort of, everybody says take a long-term perspective, but that's what history shows. And yes, I think you can start investing if you've got a small amount of money to put in. I wouldn't try and pick that one best stock because that's a very hard exercise to do, particularly if you don't have a lot of knowledge. You can always look to buy one of the low-cost ETFs or exchange-traded funds that you can buy, and they replicate, let's say, the ASX 200 index. And typically what I say to people when they're new to investing, if you know that you've got some cash that you can put in each month, then it's best to kind of drip feed it in over a period of time, because none of us can predict the bottom of the market. I mean, it's all very well in hindsight saying, oh, that was the bottom, but trust me, on March 23rd, a few people that got it right, well, it could have been some good luck.
Yeah, absolutely. I mean, though, you're just saying all this sort of stuff, and I think people might want to get into investing, but it does become a bit overwhelming, doesn't it, with the finance jargon, or not knowing how much to invest, or thinking you have to throw the kitchen sink at it. Do you do it online? Do you get a broker? There's sort of a lot of questions. How do you navigate through all of that when you're starting out?
Well, dare I say, there is now a book that will take you through all of this. Shareclicity. That's basically what I wanted to create with the book. Was a go-to piece to help people, and although it's for both new and existing investors, I think everyone will find something in there. And once upon a time you used to have your own private stockbroker, and that's the way it used to be in the past. It is still an option, but it's a more high-cost option because they provide specific advice and research. But for most of us, we probably don't want to pay so much. And there's a number of online platforms that you can use. And that's kind of the way that I go. And I won't mention it, but it's, you know, a rather large bank has a trading platform.
Yeah, absolutely. Look, I mean, obviously we've had huge news today, possible coronavirus vaccine. Obviously the Dow's really rallied there. Moderna absolutely crushing it. What are your thoughts?
Well, there's a lot of people trying to do the vaccines. I think there's over 100 at the moment globally. I actually think that we're going to see a suite of measures to solve this problem. That's my personal opinion. I'm not an expert on this, but I did listen to a professor last night who was being interviewed down in Melbourne, and he'd been speaking to some of his colleagues in immunology and virology, and they're very confident that a vaccine in Australia will be developed. Obviously, Moderna has come through with some great results. There's also Oxford University, I think, working for Pfizer. So there's a number out there, and I think that's why I'm probably a little bit more positive than that I was at the beginning, because it was such an unknown quantity when we started. And for all of us, we weren't around in 1980, nor were most of us around in the last Asian flu pandemic back in the 1950s. So it was a very new thing, but I actually have a high degree of confidence that we will see a suite of measures, vaccines, alternative therapies to treat this. And although the world may not move straight back to the way it was, I think that we are going to adapt. The human race is quite resilient in the way it can adapt.
Yeah, absolutely. Spot on. Now, I don't know if you know this, Danielle, but we have another show on Ticker called Spotty, where every week Elio D'Amato, he shines the spotlights on shares. Now, every guest that he has on there at the end of his program, he says 2 stocks to watch for people to do a little bit more research on. I'm going to put you on the spot now, Danielle. What are your 2 stocks to watch?
Wow. Okay. I'll go the larger stocks. I have traditionally had quite large exposures to CSL, which is now the largest company in Australia, a biopharma stock, very successful. They too are working on blood plasmas for the treatment of coronavirus. And probably a little bit out of left field because it still has not recovered as strongly, but Macquarie Bank. I'm a big fan in Macquarie Bank for over the longer term. And I think although the share price has been pummeled, it has started to recover, but when you look at the business and the way they can adapt, and their asset management business and their push into renewable energy overseas and also in the US, you would have seen that Joe Hockey has now been appointed to help Macquarie Bank in that department. So I'd actually go Macquarie Bank and CSL as my two big stock picks.
Excellent, Danielle. Well, this has all been so informative. If people want to find out more information, where can they buy your book, Shareclicity? Well, it's available on my website, which is shareclicity.com.au. It is also available at my publishers, Major Street Publishing. And the good news, it'll be in bookstores in a couple of weeks or the end of May, as well as online on Booktopia and Amazon. Oh, and it's got some great reviews. Yeah, I was going to say, certainly not a dull time to be researching the market. No, thank you for your insight this afternoon, Danielle. No problem. Thank you so much, Alana.